Hi everyone, this is Rob Roy and welcome to the Elliott Elite U.S. Market Update. Catching up for the week in the markets over here in the U.S. You can see that we did move up and close this gap. We had talked about that on previous week's updates, so that little gap there was closed. Mentioned that there's no real rhyme or reason as to why gaps get closed. They just do. So you can place your own personal viewpoint in there. So the market moved up right as it filled that gap. Then towards the second half of the week, we headed back to the downside. So we're still in this larger triangular pattern here of the markets, and we'll put the Elliott wave count on here in a second and show you what else is going on, because there are a lot of patterns within a pattern in the marketplace right now, not just in the general market, but in some of the individual issues as well. So we put the big Elliott wave count on, the main Elliott wave count, and you can see that we are in the wave 5, but what is occurring in the wave 5? I'm curious as to those of you that have been watching these updates over the past several months, what you're starting to pick up, because that's the key, is when you start to see things in the charts yourself, that's when you know that things are starting to soak in. If you don't see anything, don't worry about it, we'll get you there. But the main thing here is that we're in the larger wave 5, but within that wave 5 you can see that we have a flat. So that's the A segment. And this is all normal. All this means is it's a complex wave 5. So you can see we had a straight down wave 4, so that was a mono wave 4. We're having a complex wave 5, and we'll see what the resolution is. Talk about the Elliott rules and what they show for that. So there's the B segment, and now we're in the C segment of the flat that's occurring, and we'll see how this plays out. If that's the end of it, which it could be, because there are scenarios where the C wave of a flat stops short of reaching back to the A. Sometimes it goes all the way back there, but not always. So again, I don't trade flats very often because they're sideways patterns, and I like to trade directionally, but I am able to identify the patterns when they show up. Now the other thing to look at here, and I was mentioning patterns within patterns, so we've got a flat within the wave 5, and then look what we have here. Hopefully some of you noticed this, where we have a zigzag within the A wave of the flat. There's so many ways to trade Elliott wave, which is another reason why it's so important to have a software program like Integrated Investor or Profit Source, because they allow you to identify these things, in my opinion, in a much easier manner than anything else that I've seen out there. So you label these, when it's a wave within a wave, you label them with the smaller letters just to differentiate. So basically what we have here is we have a complex wave 5 in the larger overall market Elliott wave count. Within the wave 5, it's a complex 5 because of the flat that's occurring, and within the A wave of the flat, we had a zigzag pattern. So lots of stuff going on, lots of different things you can trade, lots of ways you can trade this. Now, what we'll watch for now is what happens to the resolution of this flat. As long as this level 4 holds here, then the wave 5 is intact. If we were to break that, then it disqualifies the larger pattern. But again, you could have been trading other things in the meantime. You don't have to just sit around and wait for that wave 5 to resolve itself. And that's one of the things that I want to impart through all of these updates and education, is there's things that you can be doing within the larger overall patterns, rather than just sitting around with one trade on and waiting for that wave 5 target to get hit. I wanted to look at the SPY so we can bring volume into the mix. We had noted that on the bounce, the volume had dried up significantly. You can clearly see that down here on the volume chart, how the volume dried up. And then at the end of the week, when the market turned around and started to reverse back down, look what happened to the volume. The volume increased back up. So on the bounces, we're having lower volume. On the selling, we still have higher volume. So that's, at least at this point in time, still a little bit suspect to see how much further to the upside that we go. Things could change. Things could change on Monday if we have a big up day on volume. But we're going to need to have more volume on the upward moves for that wave 5 to resolve itself and make it all the way to its wave 5 target. I wanted to show you the VIX. On the VIX, you can see that at least up till now, which is my personal belief and hope, if you will, that the 15 level becomes the bottom of volatility, because it is so much more fun to trade when there's volatility in the market, especially when you're trading options. So much easier to make money, so many more opportunities. So we want to have this level of 15 hold on the VIX to where that's the bottom, and that keeps us in an increased level of volatility, and it just means things are moving more. Talk about something moving. Finally, on the 10-year TNX, we're starting to break out on the interest rate point. And we put the Elliott wave count on here, and you can see that we had a 30% retraction on the wave 4. For me personally, if we don't make it to 38.6%, then I don't look at that count. So I'm always interested in that 38% level. So I'm going to take this off, the Elliott wave off, because to me that doesn't qualify as a legitimate pattern. So then we go back and look at where's the rest of the pattern, where's the zigzag. So right here, or is there a zigzag? Well, there happens to be one here. So we can see there was the top of the consolidation range, and then we had our movement in the pattern here, and as you know, our target price has been up around 31 and change for the end of the zigzag pattern. And if we break above this level here, right in the 29 or so range, which we're right there at the close on Friday, then we can say that we are confirmed in the C wave to go up and hit that 100% extension target. So there's the A wave of the zigzag, the B correction, oops, sorry about that, the B correction, and then we are in the C wave extension. And if you want to label them, a lot of people like to do this, to label their charts, and then they can print them, keep them, save them, whatever, to come back and look at them for further education. It's up to you. You don't have to do it, but just something to throw out there. So very classic zigzag. We've been waiting on this breakout of interest rates, and it looks like it's occurring now. Interestingly enough, looking at the chart of the dollar, you can see that we had a really nice wave 3 to the downside in the low overall Elliott wave picture, and now we're bouncing around again in another flat, so we've got another complex wave 5. Now the question is going to be with the dollar, because it looks like it's moving to the upside, is that just a test of this wave 4, or are we going to relabel the wave 4 to a higher retracement, perhaps 50% or 61.8%, and then that this becomes a series of flats that was in the wave 3. So this doesn't look quite complete yet, but as far as where we are at the moment, again, a flat in the complex wave 5 is what appears to be occurring now. The movement to the upside in the dollar, however, has to be watched to see again what occurs from there. One of the great things about Elliott wave, this confuses some people and it bothers some people, but I actually think it's a benefit, is it's dynamic. You can always tell what's going on. And so if you're prudent in your trading and you're following the rules, then it's a great thing. The fact that Elliott wave is adaptive to the markets and very fluid with the markets. So it's not just a fixed thing. You can evolve in your trading. A couple of the case studies that we looked at on Chevron. Here we put this, and this hit 69%. So again, that's not a complete Elliott wave count. So I take that off, and we had the zigzag pattern that we looked at before. And I want you to notice on the pattern here, we went up and we hit the 50% level, or the 100% extension level, and this is where we close the position out. Now, the position that we talked about was a call vertical debit spread. We mentioned that. You go back and look at the past recordings. We've done all of these ahead of time. These aren't after the fact, looking back case studies. These have been live active case studies while we've been going through and doing these updates, and it returned 109%. And it closed it out when it hit the 100% extension, and then you can see we bounced above it, and so the thought process was, oh man, maybe we're just going straight up to an extended wave C, which is always possible. It usually doesn't go straight to the extended level. Usually you come back and test, and then you can see we came back down and have closed that gap. Again, there's the gap filling again, and closed right on the 100% extension. So you can never be upset with a better than 100% gain in a position, especially over the short term, which is what occurred with Chevron. And then also the ULTA trade. Now, this is the one that I showed you last week. So this trade was just less than a week old, where we ran the search, my custom search, against fundamentally strong stocks, and we moved to the upside. And again, here's the zigzag pattern that you can see. This one is labeled ABC, so it clearly labeled your zigzag pattern, and it's just right here. Just draw the lines, but it's already labeled for you, so I don't have to actually put the labels on. And I'll show you where the target was. If you remember, we were at targeting right around 235, and we talked about placing a butterfly at 230, 240, which is what we did. There was our target right there, 234. So we did the 230, 235, 240 butterfly, 235 being the midpoint because that's where we expected things to go. And look, we exploded this week right to the target. Look what's happened here. Just running right into that 100% extension and just hit a wall. But the interesting thing is right here, the market was very weak Wednesday, Thursday, and Friday. But look at what happened in this stock. We had it forecast to move to the upside, or excuse me, Elliott Wave had it forecast to move to the upside. It was a fundamentally sound stock, and it moved against the market. So it went against the general movement of the market and reached its target. Now the negative with this, and it's hard to say there's a negative when things go exactly as planned, but the negative is when you put on a butterfly, you don't necessarily want things to hit there within a week. You like a little bit more time. Butterflies tend to be time decay friendly, so it's helpful if it takes a little bit longer to get there. But because we place butterflies out of the money, we can still profit with directional moves. And if it hits the midpoint, that's going to be the highest point of profit. But you don't necessarily expect things to move that fast. If you think it's going to move very quickly, then you might want to look at some sort of another position. Regardless, the butterfly, we bought it for 23 cents, sold it for 40 cents. It was a 74% gain in less than a week. And so it's hard to argue with that. 3 or 4 day trade, make it quick, close to 75%, and call it a day and move on. But I wanted to share that with you, that one has already reached its target and couldn't have been more spot on. So we're doing pretty doggone well with our case studies that we've been showing you so far. Results have been pretty amazing, especially considering the complexity of the market right now, where it can't figure out what it wants to do. So that wraps things up for this week. Hope you've had a wonderful week, and we'll be back to talk to you again next week. Take care, everybody.